Hello everyone and welcome back. My name is Greg Furman and these are the market positions for June the 28th, 2017. Now to get started tonight, our first trade is going to be in the Forex market. Specifically, we're looking at the British pound US dollar. Now basically, along the lines of this week's Forex Weekly Outlook, we're looking for places of value to sell US dollars. So in this particular case, we can see that our key VantagePoint 18-day predicted moving average at 127.64 has been breached on the close here. We've closed now at 128.12 above that key VantagePoint 18-day predicted moving average. We have our neural index up, We can see that we have a strong trend line coming in about 126.20. Now our predicted short, medium, and long-term predicted differences along with our strength indicator are all pointing higher. We have a crossover on the predicted MACD and we connect that down to the predicted RSI at 59.8. Our indicators here are warning that we are potentially going much higher on this particular pair. Now the British pound is lagging behind some of the other pairs. So yesterday's with our euro trade very successful with that big move up in the euro today that VantagePoint actually forecasted days before it even happened. So we're looking for the same type of move here from the British pound. So when we look at and break this down by individual crossover, our short-term crossover is coming off this lower trend line. Our medium-term crossover is just crossing the trigger. Now our long-term crossover has not taken place yet, but I'm confident that it should commit to the long-term crossover in the next day or two, but we're getting an early jump on this. So with all of our indicators lining up here, we're going to then go to the daily report to fine-tune tomorrow's entry point. Now what we're looking, we always wait for the market to pull back before we buy, and we always wait for the market to move higher so we can sell. So in this particular case, with our close of 128.12, we're going to go to the daily report here to fine-tune again the entry point. We're looking for a very minor pullback to 127.55. We're then going to target 128.48. Now again, we have a lot of support sitting down here that I'm going to again bring our triple EMA cross back up so everybody can see it and be able to identify this. Now when we look at these levels, 127.64, 127.38, and 127.59. So in this particular case, all stops need to be below the very minimum. They have to be below 127.38, but I would be putting my stop down below this 126 area because potentially we could be looking at a move back towards the 130, 131 areas. So the risk to reward is still there, guys. Give the trade a little bit of chance, a little bit of a chance to develop. Now that's our first position for tonight. Now our second trade for tonight is going to be in the U.S. financial sector. Specifically, we're looking at the Santander, the SAN stock. Now we've been doing this stock off and on for the last probably since the U.S. election, where basically I promoted the financial sector. I believe that the deregulation in the financial sector will really help, and it's going to move these stocks. So when we look at this, we have a fresh triple EMA cross from VantagePoint. I'm going to bring this up here with our indicators so we can see all of this. Now that fresh triple EMA cross, our critical support is 658. We're closing at 666. This is a higher risk stock because it's under $10 per share, but I think we still have potentially some very good movement here. Now, when we look at our indicators, our neural index is up, our predicted short, medium, and long-term differences are up, but the indicator that, again, I really enjoy using is the medium-term crossing over the long-term predicted difference. Now, when I see this and when I combine this with the predicted MACD holding above this zero line, this tells me that this particular stock is probably momentum is building on this stock. The predicted RSI at 55, we haven't broke above 60 yet, but that I believe is coming in the very near future. So when we clear off that, we want to also make sure we're drawing our trend lines in here. We can see what if I draw this in here, very good strong support sitting down at about the 650 mark, 645. On the top side, when we draw our trend lines in here to make sure we understand where supply and demand areas are, that's coming in at or about the 690 mark. So that's the key area we're playing. The VantagePoint indicators are telling us we're going higher. When we bring in our individual crossovers, our short term is up off that trend line. Medium term is starting to warm up to the idea. The long term is still down, but I'm confident too that that should turn around. So when we look at all this, we bring all of the indicators together. Now we go to the daily report. The final step, never the first step, always the final step. With that close of 666, we're looking for a very minor pullback of 663, and for tomorrow 669. Even 10, 15, 20 cents on a $6 stock, guys, is a very good return. But if we look at the bigger picture here, with the financials really showing some recovery, we should be looking at a move back at $7 per share or more. When we look at this particular stock over the last year, it's been down as low as $3.50. So you can see that after that election in November, it's been basically, this stock has really been on the move. Now the average trader will look at this and say, well, it's moved up, it's done, this rally is done. But in actual fact, the financials could be just getting warmed up here. So when we look at this, we want to make sure all stops here, guys, are down below $6 per share. Give this trade a chance to develop here, as the financial sector is still one of the strongest sectors in there. Energies is another one of my favorite, but definitely the financials with the deregulation is a good place to be over the next several months.